So even if you're someone that can't afford to invest $100 a week or $1,000 a month, there are still stocks and ETFs out there that will take every dollar you can invest with the distance. And in this video, I'm gonna share with you guys 3 fairly new dividend stocks I added to my portfolio and how just with investing $30 a week can start building me generational wealth in just the next 10 years. So Williams-Sonoma is an umbrella of companies that primarily surrounds furniture from outdoor to indoor, cookware, basically everything house related. And immediately based off their definition, I assumed that this would be a very boring company, and that's important because most boring companies have boring stocks that aren't super volatile. But according to Yahoo Finance, they have a beta of almost 2. And that basically means that it's more volatile than the S&P 500. Any company that has a beta of less than 1 is less volatile than the S&P 500, and any company that has a higher beta than 1, more volatile. With all that and the fact that they're apparently very volatile, the first reason I decided to invest into them regardless is their share price history. Over the past 12 months, their share price has grown over 100%, 5 years, over 300%, and over 30% every year for the past 10 years. Within last year, they actually had a really large jump in quarter 4, and that was because they announced a record operating margin of 17% and earnings per share of $3.66. The operating margin part for me was pretty important because, well, for one, operating margin is basically how much a company is making off each product after spending money to make and manufacture and distribute that product. And when you look at Williams-Sonoma on their furniture section, they sell some fairly expensive furniture. So knowing that they're still making a profit, which sounds pretty obvious, still is pretty cool. Now, the other reason why I invested into Williams-Sonoma is because of their dividends. Not so much the dividend yield, which I believe is right now less than 2%, but more of the dividend history. They have a 5-year dividend compound annual growth rate, or CAGR, of 17.46%, which basically means that if you invested into Williams-Sonoma 5 years prior to this point in time, then in order for your dividend yield and payout to get from where it is at that point to where it is now, your yield and payout would grow by 17.46% every single year. And even if you invested back in 2006, which might be the first time they released a dividend, your dividend yield and payout would have increased by at least 10% every single year to get to where it was at the end of last year. Now, with that in mind, I immediately think that they have a constantly increasing supply of free cash flow, but they actually don't. However, there's definitely other things that have to be going on in the background to be able to maintain increasing their payouts, such as maybe share buybacks and stuff like that. But at the end of the day, the history doesn't lie. VICI Properties is a REIT, or a real estate investment trust, I've actually been hearing about a lot over the past few months, and their tenants are primarily based in New Jersey, New York, Maryland, and famously Las Vegas. When I first heard about what they did, the first thing I thought about was cash flow, because I've been to Vegas before, and I mean, casinos, restaurants, shows, a bunch of money coming in, more money coming in and coming out, so it would only make sense. This is a pretty new stock, so they don't have a 10-year share price history, but over the past 1 to 5 years, they've averaged over 7% in their share price growth. And that's pretty cool, but I definitely appreciate their dividend yield as well, which sits at over 5% right now, and that's with increasing their dividend payout also by over 7% every year for the past 5 years. Speaking of their growth, I actually watched a recent video by Dividenology, and I learned something pretty new about VICI Properties in comparison to another REIT, Realty Income, which I've religiously said on this channel is maybe more than likely my favorite monthly dividend paying position based on the same reasons why I invested into VICI Properties. But what I learned is that in comparison to a lot of other REITs, including Realty Income, VICI has a higher dividend growth history over the past 5 years at 7% in comparison to Realty Income's a little over 2, almost 3%. So for someone like me that's investing only $30 a week and every dollar counts, that's something I'm gonna keep in mind as I continue to invest into my dividend portfolio. I've been holding on to Kroger longer than the other 2 companies, but I just started investing into them a few months ago, so it's still fairly new to me. Being a grocery store, Kroger is definitely considered an essential-based company, which those type of companies were really highlighted, especially during the pandemic. So that, and having a history of offering low-cost groceries and other perks like discounts on fuel, is probably one of the few reasons, or the many reasons, why they consistently increased their share price by over 10% for the past 10 years. And with their payout increasing by roughly 15% every year for the past 5 years. Something, again, that's really important to me for my long-term goals. I also did like that their trailing 12-month payout ratio and their cash payout ratio were pretty low, meaning that even though they have enough cash flow to consistently pay and increase their dividend payout, they're instead taking that money and reinvesting it back into themselves, meaning they can build more stores or do whatever they want while at the same time being able to consistently increase and pay their shareholders. For me, that's definitely a sign of a very healthy long-term dividend paying stock to continue to invest into. What you also might notice is that in comparison to the other two companies I just invested into, it's more of a hybrid stock as far as what it offers to every shareholder when it comes to profit or share price growth history and overall dividend growth history. So with that in mind, I actually figured out how much profit and dividends I would make if I were to invest $30 a week into each company separately for the next 10 years. And this is what I came up with. Williams-Sonoma would more than likely provide me with the largest overall profit. And honestly, if I knew for a fact that this would happen, I would probably put all my money there. VICI would give me the most in passive income, and then Kroger would just be the happy medium. That's definitely the end goal when it comes to my dividend portfolio. I want to have a healthy balance of getting overall growth in my share price and overall profits, and also continuously getting paid dividends and continuously having those increase. And only investing $30 a week definitely has not gotten in the way of that goal. But I completely understand how investing an amount that you feel like isn't enough can really feel discouraging, even to the point where you may not even invest to begin with. So with that, I actually made this video where I talk about what I would actually do if I had to start over as a low budget investor, and what type of positions I would invest into, and just other tips that hopefully can be beneficial to you guys out there. So hopefully you check out that video, and hopefully you guys enjoyed this video. And until next time, as always, take care.